Hey guys, morning. Level 2 here. Okay, um, to let's go. So, yesterday, let's do a review of yesterday first. The trade plan was to look at the opening, look at sell the opening. Did not work, took a 3 point loss on a trailing stop, looked to sell the 85s, did not work. Got caught in a bear trap. That's the only single big loss took yesterday. We closed at 28.5. 6 open with a punch, return to the close the settlement, punch to the upside. So we have the deviation levels for we have calculations based on this. You would see, say, you could see zero point 0.5 deviation which we sold overnight. Look for, alright, so 28.10, you would see the number moves. So make sure that you have a plan, a system that works most of the time. So this is your deviations for today, point 0.5, which is 23.5. Notice where it's located. We were looking for that range to get into the market. We are in the market right now on a single, looking for the 24s. So we see the bearish move open. So we're looking for a retest of the 24s. Right now we are in a 23s, looking for 16s on the take profit side. We do get in on 24s, we trade in a double off at that, and looking for medium range targets. One is the volume node. First primary on the 23s is a 16, which is a return, and you can see where the volume profiles are built here. So profile closed on more or less just below the high POC from yesterday. So let's do a quick trade plan based on what we got. So we got a kickoff. What we look at, we have value trading away from value area high. So that's more or less a big stretch, which is from swing low to swing high, which was 28.30. Swing low to the swing high is 95 points. So we know we should be in a better correction. We make sure that we have structure in the area. We have two nodes of structure. Value area is located here. Last week's POC was used as kickoff level for the second big level, bigger leg, next leg of the move. If you look at it in finer detail, you will see it hit top down, shot straight up, which is risk running because you're looking at areas of interest on it. So this is the trade we have on right now. So one at 23s, we sold 23 singles. We took profits based on at 20s on one of the contracts. So it was entered as a double contract. We're looking to add a little more risk on this morning. So we're looking at selling 24s. We're not looking for the retest of the highs really on that particular trade. So what we got today, we got ISM at 10 a.m. Eastern, and we have crude inventories. Crude inventory showing a surprise build. If you look at oilprice.com, oil news today, sorry, and oil price. You will see inventory build. It's across the board, so it's not only oil. So you can see this is the build here shown graphically. You look at that um, for where we expected. So we look at what the expectation was, which for oil was a draw of 1.7, we see now build, which will put more pressure on oil, which should be able to help the bearish stance on the ES also, just a little bit. So one should trigger the next. So if we do get opening bulls, we know where we look at the how we look at the trade the market. The highest price we look at the sell today is 41.5, which came from deviation value area. So you would see 40s as a very 40 to 38 as a very high inflection point. You can see where we settled yesterday was right at the inflection point. We had continuation on the bullish side, so be very careful of what you're doing in the market today. On these ESM, these micros, you're doing a site to monitor what is the quote price on the micros versus the major ES, and see what the volume looks like. So we see a lot of volume overnight. So right now we are 300,000 to 40,000, which is about 25% of the market. No, 1/6, which is expected. About 1/6 of the market. You can see little closes and openings and on the last price. So we're looking at about 0.25 on the spread of it, so you lead it by 0.25. So you can check it on your live account. Very close on the ES side, so we already have a single sell in there looking for we take profits on that. So should be good. Once we get out of this trade, this would make us more or less guaranteed a profitable day today. So we sold the 23s as test retest, boom to the downside, got out at 20s on the initial entry, and we looking to get out at 16s. We're looking for the buys. Favorite buy is 88 today based on the deviation where we looked at the inflection point itself, where the inflection happened right at 87.5. So you want to see more or less pre-market dip, pop back to the test on market open, and then retest off settlement. At least if we do see the bears coming, we look into more or less resistance becomes support. What was supposed to be resistance becomes support, kick off levels here. So we have the weekly POC value area high and deviation levels. So this would incline at one deviation active once we break through settlement. So more or less what I do is I trade as much mechanically as possible. Try to take away a lot of the question marks from trading. A bit early this morning. Was like we here to like about 10:35. We looking to be bearish on oil, so you can see account balance changes is right. Well, I just now get filled, locked in some profits this morning. We have nothing outstanding, so what we do is wait till market open. So you're looking at your buys. You're looking at a single buy on settlement POC area. So you're looking for this 2804 as your advantageous entry. We know there might be tweet bombs, so this is your ES still running. The micro is ES, sorry. So you're looking for your 8s on the bigger move. Micros allows you a lot more leeway, risk a lot less. See what the oil is doing, right? So as we identified yesterday, we identified the first level was 40s, more or less what saved our trading day to make us close to break even. We identified the 40s yesterday. We got test of the 40s, drop down right below the 40s. So we use active trader value areas as the inclination point. We're looking for this morning open is any bounce, look to fade the bounce early in the morning. Any bounce at all, looking to fade that bounce. Favorite area to get in there is at the 53s. Normal limited risk is right about there. So 53.10, we're in an active trade right now on the live account. We sold 53.20s overnight. But we stopped at 53.50s. So 53.10s. To set up these brackets for oil. So you can see we had us at 1 trillion. So we're going for 1 to 1 and 2 to 1. Then there's 2 contracts. So you're looking at this node where we got in at D20s. You can see node we was looking at. Major swing low. Took a little bit of heat on it. More than it suit us. We want to get into active trade on the open is 53.10s. Any test or break at the swing high will result in a loss. Oh, we are ADP. Ooh, that is not a good number. Not a good number at all. ADP's non-farms was down majorly, major miss. That's a major miss. I was expecting ADP at 197, ADP showing a lot lower number. That mean NFP during this week will be very, very wild. So this will be active on the minis, micros, sorry. Why you would have something smaller than a micro? I mean, mini. Look for that 88, 85, 88 today. 90 to 85, 85 to 90. Might be in play on the open. Crude oil should be dipped in with this. I'll be looking for the break. I'll be selling my two contracts. Uh, Wait for the open. Expecting that test of the volume. I want to see that break of that level. Or that test of 53, so getting a live trade. Or 53 tens. See what volume looks like. Not a lot as yet. And so we got filled on first leg. I'll be live trade at 52.90. Decision time for wild traders. So we in this 53 range is mid range. And some important inflection points. 53.72 is very, very important to this market. It's 53, 72, 75. We've been bouncing, so it's an inflection point for a while. Talking about longer time frames. Right, I'll sell right about at 8:30. We do get skinned, so be it. Just entered our live. We went plan on entering a live trade at exactly at 8:30. Looking for that break point. Right, so we're looking for the break there. So we're running a double contract, looking for a break on the open. Now oil don't have any micros, so trading is very, very difficult. That is what most guys going to top step to trade because a high risk trade to take a monitor. Here we go. That number is really, 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 really bad. Sitting on point of control right now. Only yes. So why we chose that point that time? It's 8:30, which is a time entry. We know what is the low where we wanted to sell at that particular point. Notice where first take profit is, where we sitting here now. We have one trailer and one sitting target before oil opens. Expect the CBS. So where second take profit is. We have structure in the area, so we know exactly where there might be bulls, so just push the market back up that 30 points. So we entered at 52.80. Break of the most recent swing low. I'm looking for a major swing low test as we secondary take profit. I keep saying we, I am from Trinidad. So all trading is about is building your system, following your plans, trading your system. Trade small, trade smart. We have take profits at 08, which is up right above your overnights. This figure will be very important today. You can see really MES point of control is the really ES point of control, the difference in it. So you always use your ES point of control. Don't really study values and value areas on the MES. You do your homework on the ES, which is the major contract. As we all know, trading on margin is dangerous, so you have methods that are going through like top step or whatever. If you don't have enough capital to back up that, we look at a 7-to-1 ratio. So say you're trading for every contract you're trading, you'd have 7 times the amount in your margin account. So we're trading one contract or two contracts on the micros. $3,500 is the optimum level. Okay, going a little smaller, higher risk, nothing less than $2,000 would be the advice I give most people. You can see trailing stop is following. 5310 is where the original stop is, which is a hard stop. Trailing stop is just to make sure that you get out of the market with as small a loss as possible on your secondary contract. Like you're looking for bigger targets. So once your first contract fills, you more or less gonna be at break even on your second contract and trailing it down. So you can always move your take profits to the downside if you see the move becomes big. Advantage of trader micros. You're not allowed to do it on oil. There is no micro contract on oil. So if we do get a hit, we don't hit the 5250s before, no, you have reduced risk on your secondary, which will clear you off, and you would still have your maximum amount of risk on getting your 1-to-1 back. Yes, it's a bit different with JDS because of way the rotation looks like. So we look to take 4 points. If we're risking 7 points, we look to take 4 points off on the first contract and trail the next. locked up. So what you're looking to do is make a little bit of bank before news comes out, and we have a solid bearish view on the market right now. So we're not looking for too many buys. So on the live side, we have two active contracts close out 30 points of profit on one so far. So active risk will put us maximum a little bit at small loss. If we hit the 5250s on market open, should be good. So we have increased volatility in the market, which is a good and a bad thing. Double-edged sword. And if you pick the right points, could be in a lot of profit if you have it very exacted. You can take a lot of small losses. So here comes your whipsaw. And let's spread the market open. I have a couple of the guys who are trained. This is what we look for. Right here. Break, push down, move, returns, push to the downside. Remember we have a sell here at 53 cents. So what usually happens is most of the smaller guys look to get out of the market early. You see only just as in usually this came out, push it downside, big push. So what I do is actually I look for this up consolidation, break, push through, return, entry. You already have your bias. Just expect to get swept every once in a way based on where your stops at. Never use very 10 point stops. Does not work on oil. You will get crushed. Ideally, I would look to see the today's retest of this 23. Fan entry to the sell side. positions. So we did our live trade this morning. You would see London open. We know exactly what we're looking for. So you want to sell the market, sold off the market on the open based on you're looking for a small volume build. Because you had a bearish stance, got in, got out, 30 points. Wait for the return. See the bakery return. Sold. Boom. And the retest of the opening range on London. So that's what we had on the lives. Have on the live, sorry. Got out of one contract. We're looking for major pushes down today. Based on the API news. Jumped in a second contract looking for the break of the range. Return and trade. We have bigger stops on the live account, so all our stops are beyond 53.40. So we're using the profit of the London trade to actually add the second trade on. So we only have one contract, major contract at risk. I just trading with enough bank. And I expect to take losses. Let's try to do not to deviate with it from the plan too much. So you can see where your pit close was at 2:30. Pit close was 63.45. Go to your volume profile, use your pit close at all times. This is your active profile. Right, post open, we'll start moving our stops. If the trade goes our way, we get the 62.50s. Movie stops not to break even, just behind. At 63.10s from the 53.10s. Sorry, I saying 63.10s. Don't know what the hell is with me and numbers this morning. What is my ES doing? Sit on pointer control, which is all well and good with me. You want to be aggressive on the open man, know where your limits are. Right on your break point at the 20s. Should be a easy entry. Just stops above the high. At 1 point, not one tick. Don't want to be swept. The focus supposed to be on oil today, so if you hear music in the background, that's my people. Trading is about a if then scenario. If A happens and B happens, you look for entries at particular points, location. Mm, 3 minutes away from the open. So what the normal thing would be is run the stream till like about 9:14, 9:10, 9:14. This morning jump across. Some painting to do in my office today. So try to do a lot of stuff by myself. Oh, with the guys on the outside today. Wanted one of them to come in and say, no, you want to trade oil in his real life account. Like, alright. Think put them on a maximum risk limit of 1 grand today. He and got make some money, make about 500 so far. Got in a little later than the 6320 test. I think it was a 6350. He was looking for the correction and the return. I think he got in right here this morning. That is why I'm up this early. Because they call me and bother me. And got in here. So you can see what time I came on was right after I spoke to him. So he took out his 50 points so far on a single contract. And tell him look for the return. Either if he bonks in at 80 or look for the return to the tens. Tens is a major sell point. Alright, market is open. I just want to see it hit 52.50 before it hits 52.89. And we'll be safe for a while. And got in on 80s on the retest. So he sold two. Right now you have two active cells. Well, one active cell, sorry. One contract. Using his profit so he just got in on the retest right here. Can't draw. Oh, there's a line there. Got in right there. Looked at the breaker support. Same thing we was talking about. Looking for a 2 to 1 this morning. Woke me up like about 7 a.m. this morning. There's your opening range 52, 72, 73 to 60. 13 points are range. I think it's he runs to stop right behind the 653s. So you only run like 21 points of risk. 9 o'clock Marad is on. What the volumes look like. Oh, I forgot to put the in my where is it? Data line. Right, you can see we've been losing contracts this morning. Seen a lot of we've seen a lot of collisions. There are a lot of collisions going on there. Collisions are areas of interest. So if you have open interest or you have something like bookmap, you will be seeing what we're seeing in the background. So what we want to do is see those contracts get absorbed. And then a breakthrough. If you do see guys pulling your contracts, then we'll be able to show you that. Yeah, that is on the front computer where we are. Alright. This is a battle. Opening 5 minute bar. Hit this bar remains here. Blah blah blah. This consists of on the C. 10 to 27. Yep, 63 10 might be in play today. So you can see absorption started to happen here. Took a 9 point loss on the trailing stops. Just didn't get into the 50s. So the collisions. Where is they are pulling their contracts. So is the absorption. Yes, pull the contracts. Is who pull the contracts first? 53 tens is your secondary entry. So that's a perfect example of how you reduce risk. So if you're trailing stop, you're taking 9 points of loss there. So yeah, the test of the 53 is push. Got one live contract still running. Come back to me. Yes, yes, come to me. So this is your kill zone you're looking for on market open. Try to the next end. Oh, I'm gonna shut down the stream for like about till just past 9:30 to be back. So we have one single running now. Took 9 points a loss on the trailing stop extend. We if we get the break. You're looking to be 1-to-1 trader. 50 to 50 is your exit. Right off the POC. Poof. We up trade. shut down the stream.